Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview presentation series. And today we want to talk with EnWave, and Brent Charlton, the CEO, is here now live with us from Canada. A very warm good morning to Canada. Brent, how are you doing?
Thanks so much, Jochen. Doing very well, thanks.
Super, great to hear that. That's fine when everything is in good shape. And I think your company is also doing really good. You just presented your results and also you gave a bit of an update in a press release. This is why we want to do now this interviewed presentation. And I think it is really important for your investors here in the German-speaking region, but of course also worldwide, as this is in English done, to get a bit of an idea. And of course, I will step in with some intelligent questions. So, Brent, exactly. Brent, I would suggest the floor is yours, please.
Okay, thanks so much, Jochen. So I'll be presenting as such so that the audience will get a fulsome overview of the company from a 30,000-foot lens. And of course, Jochen, please ask any detailed questions so I can provide more fulsome dialogue to those who are tuning in. So before we start, I will be referring to some forward-looking statements based on our goals and aspirations for performance in fiscal year 2021. Please do visit our risk factors, which are listed in our on SEDAR through our AIF and past financial documents. EnWave Corporation has developed a proprietary vacuum microwave dehydration platform that is commercialized into the food sectors as well as the cannabis market. By far, we offer the most scalable and reliable vacuum microwave technology available globally. And that's allowed us, based on the value proposition of this unique technology, to implement primarily a licensing royalty business model. We've also diversified different aspects to generate revenue in 3 different areas, which I'll discuss in a few slides here.
How many royalties do you have now so far, which are paying cash out to you?
To date, we have 42 active royalty-bearing commercial licenses, primarily again with food manufacturers and a handful of cannabis manufacturers as well, ranging from Fortune 500 multi-billion-dollar revenue companies such as PepsiCo and Arla Foods and Rural Friesland Campina, Calbee, down to single-person entrepreneurial businesses that are taking new product applications to market.
Fantastic.
So when referencing our business model, I said, the core focus of EnWave is to generate a broad portfolio of royalty-bearing licenses with a number of companies in every possible location we can deploy machinery into. The royalty revenue, as Jochen alluded to, is being generated by 40 plus licensees to date. Typically, the royalty is based on a percentage of wholesale revenue generated, typically between 2 to 5%, or the royalty may be based on the weight of product that is being produced using our technology. In terms of other revenue generating aspects of our business, first we have our machine sales, which typically we're ranging a margin between 25 and 35%. Our machines, as I mentioned, are very scalable. So the small scale, our 10 kilowatt units sell for between 200 to 230,000. And that can range all the way up to 120 kilowatts in rated power, which sell anywhere between 2 and 3 million based on customizations required by our partners. We're also in the process of rolling out a tolling service option using our vacuum microwave technology here in Canada. This will be the first of its kind facility in North America offering vacuum microwave to CPG companies to roll out new products to market, which would then hopefully justify the business case to deploy their own investment into Rev vacuum microwave technology to take that manufacturing in-house. That's slated to start up in the spring of this year, and we're very much looking forward to engaging with a pipeline of companies that are waiting patiently for this to be available. And then lastly, we started a subsidiary company in 2013, which we refer to as NutraDried Food Company, that launched a product called Moon Cheese. This project was started as a proof of concept to show that our technology could be scaled and could operate reliably. It acted as that showpiece, and that led to additional royalty-bearing licenses being signed by our company. But thankfully also, Moon Cheese became a smash hit and grew from a few $100,000 in revenue the first year to over 29 million in 2019. And a little bit of a pullback in COVID year of 2020 at 22 million. So still a very strong business that we intend to invest into and grow.
Are you still affected in 2021 with the revenue, or are things moving a little bit smoother now since the vaccination rollout and all that kind of things?
In regards to NutraDried, yeah, the sales efforts are far smoother in terms of the ability to confirm meetings with additional distributors. So we would expect that our core focus, which is primarily grocery retail and C-store distribution this year, will grow, as well as continue to grow our online capabilities. What is most impactful to NutraDried's performance really is club success. So we had Moon Cheese being distributed into multiple regions of Costco in 2019. And that pulled back slightly in 2020 as those buyers for each division started to focus on more core products that were in high demand. We're hoping to win back club in 2021, which would be the most impactful to the financial performance of NutraDried. So I mentioned that Rev technology applies incredibly well in the food and ingredient space. And here's why. We offer a rapid, gentle drying. So when compared to other drying technologies, we're able to precisely control the temperatures at which the moisture is removed from the product and do it in a very quick manner. We're talking about processing times of less than 2 hours, when air dry typically would take 6 to 8 hours to produce the same amount of product, and freeze drying, the other main competitor in the space, would take anywhere between 16 to 24 hours based on the quality of that machinery. Also, because the temperatures are quite low, we're able to retain color, flavor, and nutritional retention, which is at the premium end of what applications can provide these days. And then also, because we're uniformly removing moisture content from the materials, we can create products varied in textures and have that moisture content consistent throughout the product load, which is vastly different from other technologies, which typically draw the moisture from the outside to the core. And if you stop those incumbent processes at any given point, you'd have uneven drying, right? You have a wet center and a more dry shell. Also, in terms of footprint, when compared to the incumbent technologies, we save. In cannabis industry, that's incredibly important. And it's a very flexible process. So the same machinery can be used to dry dairy products, can be used to dry fruits and vegetables. Simply put, you change the operating parameters in the HMI, and then that is dictated through the algorithms that are programmed in our PLC operating system.
Brent, as you just said, you need less time and you have a lower temperature. What would you consider as an average, approximately, the energy saving? Because it must be immense, and I think this is something for your customers which is really important. First of all, environmentally, but on the other side, cash-wise, because less energy consumption saves money.
Yeah. Well, it is more energy efficient than both air drying and freeze drying. Anywhere between 70 to 80% of the total energy consumed of what freeze drying uses up during their process. So it's a decrease. But to be honest, when we look at the cost of goods calculation for most of the products that are being produced by our partners, typically it's only 5% of the COGS is made up through electricity costs. So electricity cost isn't a huge influencer in terms of the commercial viability of applications. More so, the ability to produce product fast, so very quickly, allows the reduction of number of FTEs, full-time employees on the line. It gets product to market faster, so there's less storage options. So there's a number of auxiliary expenses that are reduced through the use of vacuum microwave versus, say, air dry or freeze dry. So I did mention that we have a broad portfolio of licensees. This slide illustrates just that. Won't obviously go through one by one, but as you can see, we have a broad portfolio of growing licensed partners. Right now, we're at 40 plus. We anticipate to be 50 plus by the end of this year or more, and just continue to build that opportunity to collect diversified royalty streams on a go-forward basis. The cannabis and hemp market, we entered into this space as Canada began to legalize this product in 2018. At the time, to be perfectly frank, we did not know if our technology would work the way that it was intended to do so. We know we can dry leafy greens, but obviously lettuce is different than cannabis. And so through collaboration with some of our early stage partners, we were able to develop two specific protocols. One we refer to as terpene max. Now, terpene max ensures that the cannabis stays well below 40 degrees Celsius throughout the entire process, which allows for a better retention of total terpenes when compared to traditional room or rack drying, which is typically the standard in industry right now, as well as 100% retention of the cannabinoids, the THC and CBD. This is really a breakthrough, given that the end product also typically doesn't have a harsh smoke to it. The hexanols are removed through the vacuum use in our technology. And so right now, we know that REV technology will save significant dollars on processing if adopted broadly throughout the cannabis industry. And now it's our responsibility to prove that to prospective adoptees by providing tours at our current partners, conducting the analytics and generating the COAs so that it's all proven, so that we can get further adopters and royalty payers within this industry. I mentioned precise moisture control. Typically for cannabis that's being smoked, you want a 10 to 14% final moisture content, whereas plant material meant for extract goes down to 1 to 2%. Our technology can offer that. We have a closed loop system for obviously the ability to potentially lower microbial counts, as well as collect all terpenes, so none one's lost throughout the process, reduce footprint, and increase process control. We can produce GMP machinery, which is very important for a lot of European-based cannabis processors because they're producing cannabis for medicinal purposes. And here's a photo of one of our large-scale 60 kilowatt lines, just the entry lock area, where you can see the cannabis material loaded onto a plastic tray, which is microwave transparent, goes in through that entry door you see. The entry door then shuts, and then a vacuum is pulled to equalize the vacuum on the main chamber. And then we have an internal door that raises up, and one by one, each tray with about 5 to 7 kilograms of cannabis per tray enters into the machine. A machine can hold anywhere between 17 to 19 trays concurrently. And again, processing times less than 2 hours. So major difference from 7 to 14 days, which it typically takes for room or rack dry.
Yeah, absolutely. And Brent, when we just had this beautiful photo here, the question would be then, this was a 60 kilowatt machine. So how much or how many kilograms actually could you dry during the year? Is it like, let's say, on a 340-day basis, for example? Can you run the machine 24/7? Meaning, what would such a machine for you generate on a full throttle in, let's say, in like royalties for you or license fees?
Sure. So the two primary large-scale designs that we offer are 60 kilowatt, which I mentioned, and 120 kilowatt. The 60 kilowatt will produce approximately 20 metric tons of finished dried product per annum, running a single 8-hour shift, 5 days a week, 220 days per year. Mm-hmm. So we're charging in the range of a penny per gram royalty. So quick math, it's about $200,000 per annum in royalty revenue running a single shift. The machinery can be run 24/7 if need be. So a simple 2x or 3x if the operator decides to layer on additional shifts. What we see in the marketplace, though, you're not going to find too many licensed producers that are producing that quantity of cannabis. So like I said, our technology can be appropriate for small to medium to large size enterprises, just based on their usage needs.
Fantastic. What happens if the machine has a problem? Who is doing the service, or is that externally?
So we have remote access to all machines that are being deployed. So if there's any issues in terms of the software programming, we can make those changes or fixes remotely. We also engage with companies that typically will have a maintenance person that is fully competent to make simple changes. We're talking about installation of a motor or some valves here and there, nothing too complex. And if something more complex to do with the power supplies or magnetrons are needed, then we send our personnel to site to make those fixes on an after-service sales basis. Throughout the pandemic, we've been traveling internationally. We had people in Costa Rica as recently as last week, Peru, basically any country that will accept us, we will go and engage with partners to drive our business forward.
Fantastic. And who is then paying for that? Do you have to pay out of your, let's say, license fee for that, or is it like a separate service contract?
It acts as a separate service contract once the warranty on the machinery expires, and the warranties are typically 1 year in length from the commissioning date. which covers all of the consumable items, which is very low. The worst case scenario, you're looking at about $30,000 to $40,000 in components needing to be replaced per annum if you have intense use of the machinery. So thereafter, we enter into service contract with a margin as any OEM would.
Fantastic. So that means you have no financial risk out of the, let's say, the longer term use of the machinery.
No, I mean, unless you have a partner that doesn't want to pay for the upkeep of the machinery, then that would be an interesting situation to get into. But no, I mean, realistically, our machines should be operational for decades without having to have any major overhauls. They're already, light years ahead of the competition in terms of, I mentioned, scale and reliability, which is, very unique for vacuum microwave. And so I think long term, we should be operating the same way we are today.
Super.
Okay, so just moving on to our commercialization pipeline. This slide provides a summary of our recent wins that we've had year to date in fiscal 2021. Our fiscal year end is September 30th, so this is from October onwards of 2020. And we had set a goal for ourselves for fiscal 21, and that was to sell 5 large-scale machines, which are 60 kilowatts or larger, and 12 10-kilowatt sales. To date, as we're just finishing up Q2, we've already confirmed 3 large-scale unit sales and also 9 10-kilowatt sales. So we're well on our way to hitting our KPIs. And if we do sell these amount of machines, then that should be generating positive EBITDA for the business unit, being the licensing and machine sales business unit. And we're hopeful that we're going to obviously blow this out of the water. But we just need to execute now, leverage the success that we've had in the cannabis industry recently, our first large-scale machine being sold to an Illinois-based company. We've also got great interest in Australasia and Europe for additional sales in that sector. And then repeat orders. A number of our current partners who bought 10 kilowatt units to start and bring product to market have had success. And now they require increased manufacturing capacity. And so there's large companies, including Calbee, that are required to buy large-scale equipment this calendar year to retain certain exclusivities that have been granted to them in their respective licenses. Also, it's worth mentioning the U.S. Army, who had bought their second 10 kilowatt unit this year for the production of close combat military rations. Right now, we're in discussion with an industry partner who would hopefully take that machine and start producing on a commercial basis for the U.S. Armed Forces. And from what I understand, the need for additional manufacturing capacity will be present by 2022, which means that they'll have to place an order in 2021, given a 6-month lead time to provide and commission our larger scale lines.
And I could imagine that this is a great confirmation for your business and for the quality, because as far as I know, the U.S. Army is hypercritical, I would say, if what they are buying, right?
You definitely need to pass a few rigorous tests. So it's not the same shelf stability test as you would have at your grocer. They expose the products to very, very high heat for an elongated period of time, and need to ensure that the shelf stability can withstand that and not propagate microbial growth, which would be obviously negative to or detrimental to the warfighter. And so we passed all those tests with flying colors, and now it's moving forward to introduction into their ecosystem, which right now they're focused on 2 specific applications only. And I can easily see this snowballing into multiple applications and making up the lion's share of a lot of their ration packs in the future, which is incredibly exciting.
Super.
I mentioned at the front end of the presentation here that we're planning to launch a total drying service using our vacuum microwave technology. And the reasons are many companies, when they're developing new products with our food science team, think they're phenomenal. But when it comes time for investment, they're not only having to invest in the vacuum microwave machinery, they're typically having to invest in building out their auxiliary pre and post processing machinery and the facility itself. So total investment can typically range anywhere between 7 to 10 million to get things going. RevWorks will provide them with the opportunity to use our manufacturing capacity to take meaningful amounts of product to market and basically justify their hypothetical business cases that then justify, obviously, bringing the manufacturer in-house. So we look at RevWorks as an accelerator for the commercialization of vacuum microwave technology and also a profit driver for our business. We anticipate by year 2 that this service offering will be profitable, and what does that mean? Well, we need at least 2 anchor clients that make up between 60 and 70% of capacity utilization. I mentioned that we had a pipeline of companies that are waiting for this to be available. One of them could make up the entire capacity utilization because of their needs. So again, we're cautiously optimistic about the future of RevWorks, but we're very excited to get this thing going in late spring.
Super.
Also, it's worth noting that we are still active in the pharmaceutical industry. We had interest stimulated significantly through a research article that was published by Merck earlier this year, which confirmed that vacuum microwave can reduce drying times by between 80 to 90%, while still maintaining uniformity and repeatability that is comparable to the industry standard of lyophilization or freeze drying. Merck is committed to continue to test our equipment, going through a rigorous process right now to determine whether or not they'll move into phase 1 clinical trials. If it goes in that direction, our joint development agreement with GEA Lyophil will be critical. GEA is a world leader in the production of GMP pharmaceutical equipment. This is an area of expertise that, simply put, we don't have internally. So our goal is to leverage GEA's knowledge and get them to build large-scale vacuum microwave GMP machines for the pharmaceutical industry in the long term, while taking a percentage of the profit from the sale of those machines.
So Brent, that would mean with the pharmaceutical, I mean, we were discussing this in the last years already, but it looks to me now with Merck and GEA Lyophil that you have now really 2 fantastic partners where you can build for the next, let's say, 2-3 years, a really solid business column, right?
Yeah, I mean, there's still work to be done, but
of course,
the way that we've set it up here is that we're minimizing our own investment internally. So we're de-risking the upside and working with companies that are very competent and historically have done quite well in building this style of machinery. So our goal is to leverage that again and monetize our tech in the fastest manner possible, rather than trying to do it all ourselves.
Yep.
So here. Okay, and now I'll just move forward to NutraDried, summarize the current status of our subsidiary company. So the product itself continues to sell well throughout grocery, retail, and C-store, and to a lower extent food service, and then really thriving online. And so what positive developments we've seen at NutraDried in the past year has been a professionalization of the sales function internally. So that's really gotten tightened up. We also launched a complete new rebrand of the product line and added several new SKUs into the portfolio, including different flavors, formats. And then most recently, we launched a new product type, which is a mix of nuts and dried cheese called Protein Blitz Mix, which has already received very favorable feedback from our customers. So we're looking to see that grow nicely through fiscal 2021.
Hey, please send some over. We want to try that.
I'll definitely send you a care package.
Yeah, please. I'm starving.
Yeah, this will definitely quench your appetite. And so in terms of performance, I mentioned in 2019, we had a breakout year, 29 million top line, and then pulled back a little in 2020, 22 million. For fiscal 2021, given that Club has pulled back, we're not relying purely on Costco sales moving forward, but more sticky sales, repeat sales through, again, grocery retail. Our target would be somewhere in the same range of 20 to 25 million for the NutraDried business. Unfortunately, this past year, we did have some overruns on fixed expenses that needed to be purged from the business unit. And we did restructure and appointed our CFO, Dan Henriquez, as the new COO of NutraDried to lower the expenses to be more in line with our core business on a go-forward basis. We're confident that by Q3, we should be back and have an opportunity to start generating positive EBITDA again, which simply wasn't the case the past 4 quarters, where, again, cost overruns were layered into the business that perhaps shouldn't have been for the stage of its growth. And we're excited about turning this around and putting a new leader in place to take over the business. So right now I'm in the process of recruiting a new CEO. We hope to have that person in place within the next month. And then that person will work very closely with myself and Dan on a go-forward basis to ensure that we're growing pragmatically and not overspending.
On what markets are you concentrating now with the Moon cheese, for example, also with your new products? Is it still the US and Canada in that sense where you are selling that? I think you're also selling with Starbucks very successfully. And I have spoken with Starbucks Europe, but they still do not have your stuff.
Yeah. So the focus for NutraDried on a go-forward basis is to continue to grow the branded products that we're currently offering under Moon cheese. Being very cutthroat in terms of which new products we'll introduce after vigorous testing. We're actually going to be launching a new and improved version of our core cheddar and pepper jack in this year, which has a more intense flavor, and when tested against the competitors in the market, tested incredibly well. So with protein blitz mix, we're hoping to increase velocities and ultimately sales through those efforts. But also, not just on the branded snack play, we're also going to be allocating manufacturing capacity to private label and or co-manufacturing opportunities. And most recently, we secured a quite meaningful tolling contract with a major CPG company that will be procuring dried cheese from us and putting it into a snack mix. So we'll continue to engage on those types of projects so long as they're not directly competing with the exact same format that Moon cheese has been providing to the marketplace. But that should obviously create better contribution margin to the business and get back to positive EBITDA as soon as we can.
Mm-hmm.
So there it is, the protein blitz mix in action, and I'll make sure that we send you a care package.
Please do so. I gotta try that.
Yeah, 10-ounce packs and 2-ounce packs is what we're launching, and hopefully this will be a stimulant to get some near-term success back in the club channels.
Mm-hmm.
Year-to-go goals for 2021 is to continue to run lean. When COVID struck in early 2020, EnWave parent company, we reduced our expenses by about 36%, and we've not let that creep back in. We've kept our run rate very low, and we've diversified the way in which we generate revenues for our business. So not just being staunch and only licensing the technology for royalty generation. We're exploring RevWorks and other methods of generating growth. We anticipate both business units to be generating positive EBITDA by Q4 2021 or sooner, so long as we continue to execute on our plan. We will continue to invest, though, strategically in the build out of RevWorks and also at NutraDried to stimulate growth. So we're not completely, locked down in terms of spending. Our cash position is robust at the moment at north of $15 million. No debt.
That's US?
That's Canadian. Canadian dollars, yeah, 15 million Canadian.
And no debt, right? No debt.
No, there's a $500,000 LOC that was drawn through NutraDried, but yeah, nothing material in the parent at all. Mm-hmm. So again, we have enough gunpowder to execute on our plans and to grow the business. The startup of RevWorks will be critical to accelerating commercialization, and very much looking forward to that. And we talked about the pipeline of prospective large and small scale orders and where we're at to date. We're ahead of the game in terms of our budgeted KPIs. So we'll just continue to hustle. Just recently hired 2 additional full-time employees into our sales function. So we have a total of 5 internally. And in the past year during COVID, we actually generated 12 new reseller agreements. So competent organizations that are representing multiple technologies in different parts of the world and generating leads for us. One of our most recent announcements in Turkey with Sütaş, which is a major dairy company, was generated through one of these resellers. So we believe that this will continue to bear fruit for us. Mm-hmm. And then lastly, the most critical in terms of, I think, near-term growth opportunity. Cannabis industry with our Terpene Max process is absolutely foolproof. Like I have a hard time understanding when certain companies turn up their nose at a new technology that can provide significant value for their enterprise. I suppose that maybe past negative experiences with other microwave technologies had sort of generated that hesitancy. But now it's our job, it's our role to disprove that and to get this to be broadly adopted in all legal markets and obviously start generating further royalties.
Mm-hmm. Brent, how do you see the development of the legalization worldwide with cannabis? Because as far as I understood now, the US is almost fully legalized, right?
No, not quite yet. I mean, the intent.
Let's say on the path to do so.
Sure, on the path. Yeah, I believe most intelligent investors, business people, believe that they're on the path for federal legalization. But sooner than that will be multiple new states coming on side and legalizing. And of course, we set up a structure where we can sell the machinery into those legalized states without much risk. And the exchange is very comfortable with the way that we're conducting business in that manner. We're no different than an electricity company that is selling electricity to help companies grow their cannabis. We're just providing a drying mechanism as part of that ecosystem. And so in the future, not only in the US, but internationally, I foresee many additional countries legalizing product, both for recreational and medicinal use, because the tax upside is so great. And many governments going through a pandemic are going to need additional cash in their coffers.
Absolutely. And what I like also most with that product you are having here with the drying is there is no recycling. Once it's smoked, it's gone.
Yeah, and more consumption, right?
Exactly.
Eating moon cheese or protein plus mix. So it's all good for us too.
Good.
So to summarize, where we're at as a company, we have a proprietary technology which is protected by 19 patents. So the moat between us and the competitors is wide and deep. There's nothing else that compares right now in terms of scale and reliability. I keep saying those two words, scale and reliability, but that's what we are. Second piece is the large addressable market. So the cannabis sector for us is definitely growing based on the flexibility of use of our tech for multiple applications, high quality. And then, of course, the food sector has always been a strength of our business, and we'll continue to aggressively go after certain applications in different regions. NutraDried is a unique aspect of the investment case in that it's a growth CPG play, very much different from the licensing royalty play. So it does provide, again, diversity and de-risking to the investor when they buy a share of EnWave. And then in terms of our commercialization strategy, we haven't been sitting on our laurels and just buying into our own hype and saying that licensing and royalties is the only way to make money off this technology. Well, no, we're implementing a tolling service offering. Obviously through NutraDried, we launched our own CPG brand, and we'll be seriously looking at other products that potentially we can take to market ourselves if other companies don't step up and do it themselves. So that'll be, I think, interesting for investors to look forward to in the future. And lastly, strong treasury, improving financials, performance, weathered the COVID storm quite well in terms of cash preservation and decisive prudent management. And for that reason, we're in a strong position now to execute on some of our growth projects. So we're not going to start to hire, new employees left, right, and center here. We're just going to continue to operate leanly and continue to leverage our external third parties, whether that be for outsourced manufacturing, for the third-party resellers, and any other opportunities that arise in that fashion.
Mm-hmm. Fantastic. That looks great, I would say. Anything you want to add?
No, I think that wraps it up. Yeah, it's a lot. It's a lot. So.
It is definitely. Brent, thank you very much. Fantastic presentation here. So to say the year 2021, the business year for you is obviously already has started. The first quarter you did already with last year. And so how was this quarter, as this will end now in approximately 9 days? So are you satisfied with the quarter?
Yeah, so this will be
the second quarter for you?
Yeah, exactly. And we're pleased with how things have gone. Like I mentioned, in terms of the amount of machines that we've confirmed so far, we're well past 50% of where we wanted to be, and with half a year to go. And our motivated team internally here to convert a lot of these near-term opportunities into tangible agreements. So really, really bullish on where we can go this year. I'm excited.
Yeah, that's right. And we saw already your share price moved up to $1.70, $1.75, I think. You're now at $1.41 approximately. And it looks like there is quite more room upwards, I would say, if I look at your business.
Yes, I agree. But, from an operational standpoint, we always think about, one by one, each agreement, knocking them out, base hit after base hit after base hit. And then eventually there might be a home run in there too, with multiple machine orders for a single company. Mm-hmm. But we're extraordinarily focused on just converting what we have at hand in terms of opportunities.
Fantastic. Super. Brent, thank you very much. It was a great presentation, 35 minutes. I like it. And a super update. And I wish you all the best for that. And I have a good feeling that we talk quite soon.
Great. Thanks, Jürgen.
Thank you. Yeah, ladies and gentlemen, that was Brent Charlton, the CEO of EnWave Corporation, and you heard it. The company, walked quite well through this COVID pandemic so far. Of course, they had some challenges and some hiccups with, let's say, the NutraDried moon cheese division, but this is also solved now. And what I really like is the company has really no net debt. This is super important to me. $15 to $17 million in the bank. They are well set up and well financed, but what I also see is a lot of potential here. First of all, for the short-term future with the, let's call it cannabis market, but also longer-term through the pharmaceutical markets. And I think EnWave is really pursuing this the right way to stand on several really solid columns here. And this is how you should build up your business. I would suggest you really have a close look to this terrific company. And wish you all the best. Thanks for watching us, and bye-bye from Switzerland.